So the 5 best things, 5 claim things. Cash flow, capital growth, or growth potential, high dollar, low interest rates and population. What's normal? What's a normal cash flow? In the USA, if you buy a property between $50,000 and $100,000, quite possibly you get 20% plus rent return, gross rent yield on it. Between $100,000 and $150,000, my experience, you get about 15% gross yield on it. And after 150k, it starts slowing down. And it's not until you get into whole blocks of units that you actually start getting a decent rental yield again, but you're now looking at $1 and $2 million for a big block of units. In Australia, it's pretty depressing, isn't it, when you look at this? We're only getting 5%. Regional, 7%. Now someone turned around, well, hold on, okay? Regional, we had one guy in Queensland yesterday actually bought out an orange. I think it was actually one of the guys actually, he bought it for $300,000 I think it was. And he's getting $650 rent on it a week. In Orange. That's not in Orange County, California, it's in Orange, New South Wales. Pretty cool, eh? No, it was a house. Yeah, boom, boom. Growth, what's normal? USA. I don't know what's normal. Someone asked before, what's happening with property prices? In 2005, 4, 5, 6, 7, I was buying property over there. And those properties that I bought are still worth less than what I paid for them. Still worth less than what I paid for them or financed them for. I don't know when the potential capital growth is coming, I really don't. If I can... Everyone should have seen the old property clock we talk about. Can everyone? Yeah. Sorry, not that. 2005, 6, 7. We've got the boom. Everyone that gets the property reports now will... Gee, that speaker's just a little bit annoying, isn't it? Come over that side. And growth. Where are we taught as investors to buy property? Opportunity? To growth? Do we start buying at 6 o'clock?
7.
Thank you. 7, you said? When we stop buying? 9, 10. In actual fact, I actually believe we really, if we could actually really read the whole market and get it right all the time, we'd actually want to be sitting between 6 and 9, between 7 and 8, that sort of period there, or 6:30 and 8:30. Now I'll explain why. The Melbourne market has been growing quite strongly over the last couple of years. When did the Melbourne property market get to 6 o'clock? When was the date that we should have started buying in Melbourne? No, I want a date. The date, please, Chris. What date in 07? No one here, and I know no one here can do that. When should we stop buying in Melbourne? The date. Come on, you're investors. Teaching this all the time. What's going on? March 10th, June this year. What about Sydney? When should we stop buying in Sydney? Now. You sure?
Next year.
Next year. No one said which part of Sydney. Did you?
No.
Are there multiple markets in Sydney?
Yes.
Are there multiple markets in Melbourne?
Yes.
When did that market start and when did it finish? I don't know. If we focus on buying an area after that market has started, what do we need to happen here before we start knowing that it's the right market to buy in? Growth. What else? Clearance rates. We're starting to see different factors occurring in the marketplace, and they're the drivers for us to say now it's time. And we look for those indicators. Now a lot of people are saying now is the time to buy in the States. The market is bottomed out now. It's a country of 330 million plus, 50 states, 1,000 cities, over 500,000 people. How the hell can you say now is the time to buy? How can you say it's the bottom of the market now? You can't. But that's only going to be sporadic information. And which newspaper you read, which city. Chris, you understand, it's a big country. I don't know, even in Australia, a little country, less than a tenth the size of the States, I don't know. I've got to look for the market indicators and the drivers. Hang on if you can. So potential growth. And Australia, well, we know historically we've got 7 to 10% growth, historically. Now the number of times is Shirley, here and I. Was it you that, did you throw through to me some information on one of your properties that are you just selling one? Sorry, I apologise. One of the clients has literally sent through some information on a property she literally bought in Mossman 10 years ago. And this was a unit, and she bought it for like $150,000. And then within 3 years of buying it was worth $300,000 or $250,000 or $280,000. And it literally has tripled in value in 10 years. Not just doubled in value in 10 years. Now, if you buy wisely and you understand the market and you are buying a discount, you're buying that right part of the cycle, I actually believe we'll get better value. I believe we'll get better overall value than 7 to 10% growth. But overall, for market in Australia, we say 7 to 10% growth. We know that's there. The number of properties, supply and demand. Now, this is just one little suburban block in one city in Dallas, Texas. Look how many properties are for sale in just that one little block. Hundreds.
Is this current?
This is current. Literally just got this off the net the other day. This is a site called Zillow, one of the many real estate sites you can get information on. I just wanted to point that out. There's a lot of property on the market. When the properties are on the market and there's a lot of supply, what happens to the prices? It goes down. So until all those properties come off the market and there's a shortage of property on the market, will be when the market returns and gives stronger growth and stronger prices. The high dollar, yes it is. It's very high. When we invested, it was 65, 68 cents in the dollar. We actually had to take a lot of cash over there to invest. Now it's basically dollar for dollar. What's happening to the dollar in the next 5 years?
Who knows?
Oh, what? Oh, it's going up, it's one going up, could be going down, could be going sideways. They're printing like it's going out of fashion at the moment, I don't know. Interest rates, they're awesome. They're awesome rates. They're 3.9%. You can actually get loans down to 1.5% if you really try. Does that matter to you guys? Yeah. It's pretty relevant, isn't it? Population, huge population. Many states. They say there's about 300 million people in the States at the moment. In places like Texas, Nevada, California, Arizona, there are so many illegal immigrants, they actually reckon there's about another 20% of the population that isn't even accounted for, legal immigrants-wise. If your house was vacant for any period of time, what would happen would be that someone would come in overnight and they'd go, PowerPoint, and kick a hole in the wall and find the wire, and then go and pull all the wire out, and pull it down from the ceiling, get all the wiring out. And they'd go right around the house and get all the wire. And they'd put it in a big pile on the lounge room floor, and they'd go, water pipes, bathrooms. And start pulling. Would they turn off the water first? No, they wouldn't. They'd pull out all the water pipes too, and they'd sit that down in the lounge room. The rest of the night they'd stay awake and they'd pull off all the plastic sheathing, and they'd be left by the morning, sunrise, they'd have their nice ball of copper wire. And they'd take that ball of copper wire and all their water pipe and they'd run down to the recyclers, because copper's actually pretty pricey to know, as I'm sure you can appreciate. Run down to the recyclers, they'd hand it in, they'd get their 10 or 15 bucks, they'd go and buy their next fix, they'd go and sleep all day under a tree. Nice life. They'd go to work the next night, find another house and do it all over again. Okay, so let's look at some of the cons. So let's look at some of the other points that aren't normally talked about. Liens.
Liens are a great way of buying property. So in one fact, it's actually it's a good point about investing in property, but liens are really nasty. Liens can be in place from anywhere from 3 months in places like Texas and some cities in Texas, up to 4 years in other states. I've got one property in New York that unfortunately, due to whatever reason, I let go, foreclose, and I've actually got 4 years to go back and buy that property back. So even if someone comes along now, buys it, fixes it up, lives in it, I can literally come back at 3 years and 11 months and 27 days and say, thank you, here's the bill, I'll pay my bill out to the bank and it's mine.
So yes, you get on the net and you can find property. Look, Detroit house, $1. Now someone the other day turned around to me and said, I think I was in Melbourne or something, and I said, well, I'll buy it, I'll option it, it's just like buying a share and putting an option. I'll buy it for $1, sit on it for the next 5 years and let it grow in value. Well, actually, that's a good idea, isn't it? Why don't we just go and buy 1,000 $1 homes and just sit on it for the next 5 years, and if it grows, it grows. That makes sense, doesn't it? When you buy a share and you option it and you're hoping down the track that it's actually going to increase in value, you've got to pay some insurance, don't you? And some costs of actually maintaining that position on the share market. Anyone that's done these shares before, do you understand that general principle? Don't you think that house would come with some expenses? Like paying the city taxes, paying to keep it maintained and locked up and secure, insuring it. Now, city taxes, even on a house like that, can set you back $5,000 a year. This little house, really nice house, we've renovated, duplex, pulling in $500 a week, a month rent. Challenge? Some druggies moved into it. Now, what happens to druggies in the States? If they're trading drugs out of a house? They get raided, yeah, they get raided. No, you know what the council does, or the city does? They actually just come in and bulldoze the place down. Do I have any say in that? No. Who's got the mortgage? Me. I can't tell the bank, I had some bad tenants in there, I'm sorry, I can't pay the rent this month. Can you give me a break? No. No recourse. Well, I didn't have the keys. I couldn't. The keys were jingled. You couldn't hand those back to the bank. I suppose you could, but no recourse anyhow. But the point being, your property can disappear, literally.